Hey, I'm Michael Smith, CEO of Bluefield Realty Group, and today I'm joined by Nathan Robirds at PrimeLending, and we're talking all about interest rates and how to calculate whether or not it makes sense to buy down your interest rate to save money on your monthly payment. So, Nathan, most people don't realize that when they're shopping around for an interest rate, they don't just have one option.
No,
right?
Never just have one option.
So lenders have available what's called a rate sheet, which means at any point in time, there's a variety of different rates that they could offer you, right?
Correct.
And there's a regular rate, and then you can kind of go down or up and either spend extra or get extra,
Absolutely.
right? So how exactly does that work?
Yeah, so every day we start out with what's called a par rate. So this is the going rate for not paying any extra or not getting anything extra back for
Okay.
a particular rate. So that is kind of the standard baseline rate that we have. And then borrowers can obviously have an option to buy it down, which is what we normally consider points. So you can spend anywhere from 0 to 1% of the loan amount, or even higher than that, to
Okay.
get it lower.
Okay.
All right, but then also you can do the same and get that kind of money back if you decide to go a little bit higher,
Okay.
if you're short on funds or need some
So
closing cost
a
assistance.
point is 1% of the loan. amount,
1%.
right? So if we're talking about a $150,000 loan, a point would be $1,500.
That's exactly right.
So hypothetically, if I wanted to pay a point at closing,
Right.
that means I'm bringing an extra $1,500 to the table.
Correct.
What does that get me?
So in that type of scenario, you're probably going to get between $40 and $60 less payment a month. So
Okay.
your payment will be reduced by $40 or $60 by paying that upfront point.
Okay. And the cool thing about this is we can actually run a break-even analysis, right? And say, if I pay 1 point, it impacts my rate by this. I'm bringing this much extra closing, but I'm saving this much per month.
Yes.
Right. So about how long would that really take to break even and start to pay dividends for?
So on today's rate sheet that I looked at this morning, 2 to 3 years.
That's it.
So if you think that you're going to stay in your house for longer than 2 to 3 years, you start actually getting that money back every
Okay.
month after that. So it actually is a return on your investment.
So if I'm buying a house and I plan to live there, let's say 5 or 6 years, this is definitely a conversation worth having.
We need to talk about
Okay.
it. Yeah.
Now on the flip side, let's say I don't have this extra cash we can
Yep.
bring to closing, and I'm actually in more of a tight spot where I don't quite have what I need for all the closing costs.
Sure.
Right. What options are available to us then?
So we could do the actual reverse of that, right?
Okay.
So the lender has options to where, as you pay a point to get a cheaper rate, sometimes the lender can give you money back at closing as some sort of a lender assistance. But now, you will have a higher rate and your payment will go up. But that might be easier to handle than coming up with, say, $1,500
Right.
up front.
So maybe I can, instead of paying a point, I can get a point.
You got it.
My closing costs go down by $1,500, but then my rate goes up by $40 to $60 a month, right?
That's exactly right.
So this could be a good scenario either if you're tight on funds, or let's say you're only going to be in this home for 18 months.
Yes.
Right?
If you're in a house for less than 2 to 3 years, we need to talk about actually the
About-
inverse of that,
yeah.
which is giving you money back at closing.
Very
That's when
interesting.
you'll actually start earning more money
Yeah.
on that money.
So obviously, full disclosure, rates change every day,
Every
right?
day.
Based on the market. And really whether or not this makes sense for you is really, really specific to your situation.
Absolutely.
So if you have any questions about interest rates, whether or not it makes sense to buy them down or get a lender credit at a higher rate, we really need to get you connected with Nathan. So please call or email us. We'd love to make that connection. We can talk about your situation and see whether or not this makes sense. So at Bluefield Realty Group, we strive to be your guide through the real estate process. I know PrimeLending does the exact same thing.
Absolutely.
We all want to work together to help minimize stress and maximize results for you. So thanks so much for tuning in, and we'll see you next week.